All right, Malcolm, what do you want to see tonight? How much spending can you tolerate?
Yeah, I think Kate hit it perfectly. It's really about them coming in somewhere between 21 and 22% AWS growth, because that growth number had been sliding since about 2023. They reversed course last quarter and put up numbers of about 20% growth in AWS, which the market did appreciate. However, the CapEx, I think, is really going to be the tail that wags the dog. So we've seen about a 4% slide throughout the day-to-day. I think the selling pressure will probably continue to weigh on this company in after hours, simply because the market is showing right now it really wants to sell first and ask questions later. I don't know why Amazon would be exempt in that. And so I will be pleasantly surprised if the market does start to change its tune and reverse course into the print, but it's unlikely.
As Mark Mahaney was talking about, it's been a tough couple of years. The stock really hasn't done anything. Why?
Yeah, it's been a really tough stock to own. I think there's a lot of things to love about this name. I also think that right now is the time that's showing why Andy Jassy was pretty adamant that the company didn't have any interest in spinning out AWS from the e-commerce or the rest of the business lines that Kate was just talking about. I think that taken together, there's a lot to love here. They're about to cross the $700 billion annualized revenue mark. And so I think it's short-sighted for investors to be only focused on the AWS numbers and not worrying as much about everything else there is to love about this. They've invested tens of billions of dollars into robotics in their fulfillment centers, for example, over the last few years. That has to be accretive. It's expected to be about a $15 billion savings annually by the end of this decade by B of A's research team. So there's a lot to love here, but investors really don't know what to focus on when they're investing in this company. And so that's, to me, the reason it's been such a laggard.
What do you make of the software sell-off, Malcolm?
I think it's overblown. I understand completely why we're worried that a lot of the tech tools, OpenAI just released a new feature that looks great for enterprise and should be competitive against the tools that Anthropic had already thrown out there that were already competitive against Copilot from Microsoft. And so I think that, again, it's a sell first, ask questions later mentality right now that's driving the markets. And I think that a lot of analysts came into this year expecting a ton of volatility, and compared to the last 3 years we've had, this is it. This is exactly what we talk about when we say, and obviously volatility always meaning negative volatility. This is what it looks like.
Well, there's a fear, you know, the market's trying to absorb these losses in software. The fear, according to some, is that if you start to have some of the chip names roll over, then obviously you're going to see a bigger and broader problem within the technology orbit. Malcolm, thanks so much. We'll talk to you soon.